So today I just wanted to give you my brief market view of what could happen and what might happen. So basically, I am going on vacation now, and I won't be back trading until the end of the month, and basically in start September. So this is really I'm not posting anything in August here after this video. So just be patient. There won't be any trades, any info, any yeah. So but let's just start out. In the indices, I am trading the Euro stocks down here a lot usually. It has been pretty volatile, and it's when you look at the volume, it's pretty. It began to take off a bit again here when someone's supporting it in order to buy it, and but still it's not really that heavy compared to you can see the overall picture, and that's the same scenario here in the DAX, and the other indices too. Also in the interest rate products here, it's a bit slow, but still they begin to pick up a bit again here. But I think it's going to be how to say, during August here, it's going to be a bit sideways. Maybe I'm wrong. I could be very wrong. But still, in my view, as I see it, this is of course, a big ranging chart on the daily here. In the Bund bubble, the Buxel and the Schatz here, it's those are the ones during Eurex I follow heavily, and to me you can draw your lines and look for resistance and support everywhere. It's just yeah, let's just draw them up here in the Bund. As I see it, we got some pretty important levels down here. But basically, what I see might happen here is I'm not a how to say moving average guy, neither a fib guy, nothing like that. I just look at how to say the overall picture and try to go with the volume in these products in any way they want to move. It was how to say the last couple of weeks has been pretty hard for me to read in the Eurex stuff here. There's been a lot of upside momentum, but it has been very mechanically. It has been non-readable, at least for me, and that's why I only traded the ones on the Globex even during the Eurex time zone. But well, that might change. It might not change. I'm not sure. But anyway, that's just what I felt like at the moment when I took any trades the couple of weeks. But some very interesting stuff here when you look at the yield curves. This is the 10-year, the German one. This is just a monthly overview, and when the way I see it, they want to, or at least it's a chart, and I can't predict or can't say whatever is going to happen here, but you can argue that there's a two leg down here, and they may pull back here, and the Bund is going to be trashed heavily over the next couple of weeks or even the month, I don't know, but I expect to see some momentum to the downside in some way. The indices are rising heavily, and there is someone betting that this is a certain level, and up here too. Again, I don't know. how to actually interpret them at the moment, and I don't really care. I think we should at least blow out some tops, the way I look at it. But still, I'm definitely more negative in terms of all the interest rate products here, and how to say, they just feel so heavy. Whenever when you are kind of watching them in and out all day, you don't try to get too, how to say, hooked up on only one side, but still it seems like when they are being shorted, it's some massive runs compared to the upside momentum we have. Also yesterday there was a very steep sell-off. I wasn't in it during the Globex session. I took some scalps on the Bund and some in the Euro stocks, but some very quick ones at not much to be collected there, but still that was okay. But basically, as I see it, if this is going to go down, I think we are gonna close in the Bund the gap down here. In the other products too, we have closed it down here in the Shats. And if this is gonna go, the next support level I really see here is down here, these 111, 800 here, and that's a pretty far away direction, but that could really lead up to some heavy momentum to the downside. But let's try to take a look at the US ones too here, the 30-year and the 10-year and the 5-year here. Those I follow very closely too, and those are the ones, especially the 10-year here. I'm trading that a lot, so let's just zoom out. So this is how to say, it's a very high level picture of the market. This is what I look at in terms of when I talk about the market structure, all the context behind it. I pay closely attention to all these large swings we have, and of course I measure the stuff too, but only briefly. When we got these momentum rounds here, I try to measure them in general and have them written on a paper just to see whether it fits or not. And these very steep buys here, you can't really account for that. It's just I think those were FOMC based or NFP or something like that. But still, this to me, this looks like we're going to blow out these bottoms down here. And of course, this is a really, how to say, clean picture. Still, in the way I see it, we are beginning to at least test these areas down here, here too, and in general, I think when I like to see the momentum down here. If there's really hard interest in selling it, I think we are going to take out these, how to say, massive runs we have here. We need to, not need, but I think we're going to test them and get the liquidity in order to pull back massively. So just those are just my kind of views at the moment. Still, you can argue that the economy is good. There's negative interest rates in Europe at the moment. They are plus in the States, and that's a kind of a weird scenario. So it's a twofold, how to say, view I have at the markets at the moment. But still, that's why we scalp fast in, fast out, just to be on the try to be at the right side. Not every time, but at least most of the times. Let's take a look at the interest rates here for the CN. You look at the monthly candles down here. They are rising. So it doesn't tell me anything other than yes, this is an important area down here. We've tested it, the 1400, and it could be a massive pullback here. And if those bonds are going to sell off, it's a good start to do it now. And if you want to, this could be, how to say, a home runner. If you hit it right, you really need to pay attention to what is happening in the overall markets. You need to, although I'm not very fundamental based, you need to pay attention to what is happening all over the world. You need to know whether the different countries' economy is kind of progressing or it's downsizing. Because if there isn't any, how to say, stuff that can background the material that really can justify that this is going to be a very steep bear market in the future, it literally won't happen. Of course, there could be some short momentum to the downside, but when we're looking at the bigger cycles, we need to really pay close attention to where we are in the cycle. So, but basically, I'm out of here. Almost the whole all of August. Back in start September, I won't bring any gear with me. I'm just offline, and yeah. Um I hope you take care and play it well out there. So thank you very much for listening, and have a good weekend.